Off by taking a look at the daily chart here in the euro versus US dollar. This low that going back to the month of May 23rd to be exact, came in at the 130, what is that, 139.69. Now the low for today's trading came in at 139.85. So we've got there with about 16 pips of that target on the downside. Better support or what should be strong support for the euro versus US dollar would come in at this level right here, where the 50% retracement of the move up from the January 2011 low, which occurred on January 10th, to the May 2011 high. The 50% of that move comes in at the 139.06. As you can see, the 200-day moving average also comes at that level, so this is going to be a key support level for the euro versus US dollar. But in order to get there, we need to get through this low here at the 69 level, and we haven't been able to do that. So let's take a look at the 5-minute chart and see what that's telling us. This 5-minute chart had a nice little trend move to the downside here. That trend move tried to break below the bottom end of the channel here on 2 separate occasions, and each of those times the market moved back above it, above the level. On the last move to the upside, we were able to break above this 38.2% retracement and the trend line at this level. But as you can see, the market is kind of pausing and not able to get to the next target, which would be the 50% and the 100-bar moving average. If we get a failure of this move to the upside and move back within this channel here, back below this line right here, then the bears will continue to be in charge of this market, and the bulls will have to give up, I would think, their position as the market continues its trend in the direction to the downside. So the market is showing a little bit of more positive, being above this trend line, above this channel here, but the momentum to the upside is a little concerning, given that it's so narrow at the moment. Let's take a look at the sterling versus US dollar next. We'll take a look at the daily chart, and I want you to focus on this this 61.8% retracement point. This is of the move up from the December 29th low to the high here. 61.8 comes in at the 158.78 level, and the market low came in just short of that here today, I think around the 81 or 82 level, and the market moved back to the upside. So it got within about 2.5 pips of that 61.8 and found some support buyers. Now let's take a look at the 5-minute chart, and like the euro, the corrective move to the upside here has been limited. In fact, we remain below for the most part below these lows from Friday's trading. Have not been able to move above the trend line here on the top side, nor the 100-bar moving average on the 5-minute chart. These levels are going to be resistance levels, and in order for this market to move to the upside, we need to break through those levels. If we cannot, then those people who bought the dips here, bought this move to the upside, will simply need to be forced to sell their position, as they get no move through this key resistance level. And this here is key. This is key resistance for the currency pair. Lots of arrows there. I'll get rid of them. This area is our key resistance area. So if it can't get through that level, guess where we're going? We're going to continue the trend to the downside. So watch this area right here. If the market can't get above that level, or if you're inclined to sell the market, that's your stop. A move above that level should lead to further upward momentum with the 38.2 and the 200-bar moving average, the next target. Traders who want to be patient and want to sell, you may look to, well, you can either sell against this level or sell against this level. If the market moves above those two levels, then all bets are off. The market's likely to continue its rotation to the upside. Let's take a look at the dollar versus yen. Actually, I want to look at the daily chart. We fell below this the trend line here. This trend line held on a number of different occasions here. One here, a couple here, one here, one here, and today we were able to break through that level. That level comes in at the 41 level. If we stay below that level, currently trading at 30, our next key support is going to be down here at the 80 level for the dollar versus yen. Let's take a look at the dollar versus Swiss franc next, and I'm going to look at the 5-minute chart here. When we entered today's trading day, we were in a very narrow trading range. Look at the number of how the market stayed within this very narrow trading range between 84 and 59, maybe 25 pips or so. The market gave you some clear signs that the upside would be was limited, and I'll show you where by zooming in here. If you take a look at these areas right through here, um, right here, 1, 2, came up short here, sorry to use it here and here. That was the prelude, the inability to get above that, to the move to the downside here. And right now the market is staying below the 100-bar moving average. That 100-bar moving average currently comes in at around the 83.57 level. Staying below that level keeps a bearish bias in place for the dollar versus Swiss, and if we can't get above that level, look for further selling pressure. If we move above, we could see get some more short covering to the upside. I want to take a look at the dollar Canada as the next currency pair, and we'll start off by taking a look at the daily chart. The move to the upside here ran against resistance at the 96.99 level. The high came in at the 96.94 level. If you take a look at the hourly chart, actually, the 38.2% retracement of this most recent move down from the high going back to June 27th to the low that we reached on July 8th came in at that 93 level. So not only did we have resistance at 99, we had resistance at the 93.3 level here, corresponding with this high as well. So we have a reason to sell at that point, but the reason to buy comes in against this trend line here, and as you can see over the last few hours, the market has been able to stay above, for the most part, above that trend line. A few little dips to the downside here, but those were quickly reversed, and no closes below that trend line. The current trend line comes in at the 65 level, market trading at 81, watching the 93 to 99 level on the top side for resistance. Break above that level, we should see higher prices for the dollar versus Canada. Finally, I want to take a look at well, let's take a look at the Aussie versus US dollar. This currency pair fell below the 100 and 200 bar moving average, went down to test the 38.2% retracement, moved a little bit below that level at the 106.38 level, and is finding some dip buyers, as we typically do in the Aussie versus US dollar. The move is back above this floor here, which had a number of different lows here. So let's watch this 106. 52 level on the downside, currently trading at 63. Stay above that level, and things are looking a little bit better for the Aussie versus US dollar. If we move back below that level, maybe time for some further selling pressure in that currency pair. So there you have it. Look at some of the major currency pairs. My name is Greg Miglowski. I work for FXDD.